Hey everybody. So welcome back to my channel. And in this video, I want to talk about Canadian housing and how that's going to impact the economy and what that means for the future as well. So I created this post on my own Invest and Retire community. So if you want to join this community, just click on the first link in the description and you can leave a comment and I read and reply every single comment as well. So here you will find two articles on Bloomberg. The first one is Canadian bank regulator weighs new rules as Canadian housing risk rise. And they're really scared of the Canadian housing market collapsing, which is why they're thinking of new rules to restrict buying. The second one is mortgage machine slows in Canada as rate hike hits banks' growth. So you have two sides that are happening. Now, on one hand, you see that the Bank of Canada is actually scared of the housing collapse because it looks like it's happening. The prices are at the all-time high, and they don't want people who cannot afford the mortgage to get the mortgage. So they are trying to tighten the housing market even further and trying to push the prices down. Now, the housing stress test includes debt to income ratio, debt to service ratio. And for example, the interest rate right now is almost 5%. And a stress test will require the buyer to be able to service the debts at 6, 7, or even 8%. Previously, the big banks in Canada are asking the regulator to loosen this rule, but then now they're thinking of tightening even further. And what that impacts is limiting the buyer pool, meaning that there are less buyers in the market, less demand in the market. And if you have a lot of supply and very little demand, then prices are going to drop. Now, in the second article, you will find that the bank's mortgage business is actually declining over the last 6 quarters. So I have attached the image here, but let me show you in this article as well. So they gather from the company's filings. So here for the last 6 quarters, you can see the mortgage business has been declining. And this actually impacts or is an indicator of the Canadian housing market because construction workers, realtors, mortgage brokers, they'll be getting less business. Some people might even get fired. And here's an example. Private mortgage lender is exiting the Canadian real estate market. So let me just show you. So here, this is Bloomberg BNN, October 28th, 2022. The reason is because the default rate is rising. Basically, people are not paying their mortgage. And I think that's why the regulator is so scared of the Canadian housing market collapsing. And unless there are this new group of immigrants coming in that can buy up housing at the current prices, then it's going to be tough for Canada to avoid some sort of correction. Now, one more thing to note is that 22% of Canada's GDP is actually based on housing. So by having such a high interest rate, you effectively destroy your own real estate industry, and people who are, let's say, for example, working in the realtor industry will need to look for new jobs, or they need to go find additional income for like a part-time job or something, which shifts people away from the real estate industry and effectively causing a decline in the GDP. So raising interest rates for Canada is really a double-edged sword. They're effectively holding onto a dagger and stabs themselves in the heart because they're basically constraining their own real estate industry. But if they don't increase the interest rate, then inflation will be going up very quickly. I think right now the game plan is that within the next 3 to 6 months, inflation will be coming down significantly to around 2 to 3%. And at that point, Bank of Canada will have the excuse to lower the interest rate, which then hopefully able to save the real estate industry in time. So what do you think? If you want to comment on this post, then click on the first link in the description to join the community. It's my own investing community that's free, Invest and Retire. And if you want to learn about how I invest in the market, then you can also go to the second link in the description and attend the free webinar. So I'll see you in the next video.